The leaders of the Liberal and Labor parties, Scott Morrison and Anthony Albanese, square off in the second debate of the campaign. The Reserve Bank makes it clear that there's plenty more rate hikes to come. And the top two Macquarie executives earned $62 million between them for a year's work. It's Monday, the 9th of May, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. How many days left? We've got 12 days till the election. It's getting exciting.
I can't wait to talk to you about the debate last night because I'll be very keen to hear your thoughts. But I thought it was pretty fiery, pretty feisty.
I thought it was great. In fact, the last 7 days, if you take, last night's debate and then prior to that, what happened in global markets and what the Reserve Bank did, and it's been an incredible 7 days or so in terms of news and the outlook for Australia, for the economy, for social policy, for climate change. It's all kind of coming to the pointy end of things, which we'll all get to vote on May 21. But it's a great debate to have as an Australian.
Yeah, it certainly is. And look, immediately after the show, got a terrific chat, a really, really interesting conversation today. You are speaking with Scott Haslam from Crestone Wealth Management, the Chief Investment Officer there.
That's right. Scott is very forthright about what he thinks is going on in markets. Well worth hanging around for that one.
Yeah, absolutely. But first, let's talk about the debate. So Scott Morrison and Anthony Albanese held the second debate last night. It was a bit of a Barney, wasn't it? There was plenty of speaking over each other, plenty of arguing, and at times not really a lot of control over the conversation.
It certainly got out of hand, with neither leader doing a great job representing themselves, I'd say. The conversation included all sorts of topics from divisions within the coalition, political corruption, the need for a federal anti-corruption commission, taxation and climate change, through to interest rates and the cost of living, defence in the Solomon Islands, China, COVID, and doing deals with the crossbenchers. Both leaders were asked about their attitude to women and how they're perceived. One of the more uncomfortable moments, I think, was when Mr. Albanese was asked why he wouldn't start an inquiry into claims the late Senator Kimberley Kitching was bullied. The Prime Minister's final statement focused on the government's economic credentials and future investing, including in health. He said now is not the time to risk things by voting for the unknown, i.e. Labor. Anthony Albanese's final statement focused on the cost of living and wages, more affordable childcare and aged care, climate change and equality for women.
The big question, though, Sean, really is who was the winner?
Oh, I don't know, really. I mean, maybe Nine Network for hosting the debate, though. I'd like to see what the ratings are like when they come out. I wonder how many people tuned in. The viewer poll taken during the debate put Anthony Albanese as preferred Prime Minister over Scott Morrison, 49% to 45%. There was 50,000 votes on that, which is a huge amount, though I'm not quite sure how scientific that polling is. Certainly the opinion polls out of News Corp and Nine over the past 24 hours or so suggest that Labor has a decent two-party preferred lead of around 54 to 46%. In the world of politics, that's quite a gap, and it's a gap that has widened over the past couple of weeks. Mr. Morrison remains the preferred Prime Minister in those polls, but again, the gap between the two is narrowing.
Sean, I don't know about you, but you know what I really missed from the debate last night?
A red tie from Anthony Albanese?
The worm.
Ah, the worm.
Do you remember the worm that used to...
Yes.
It was always on Channel 9 when Channel 9 held these debates. The worm that would track the responses as it was happening from the audience. And that was the best part of the entire spectacle, was watching the worm and the instant reactions when they said something, and then you just watch the worm just dive off a cliff when they disagreed. Bring back the worm.
Did because, last night was all about QR codes and logging on to the website. I think back then they actually had a studio audience who would push like, dislike.
Yep.
And that's how it went.
Keep it simple, really, isn't it? Maybe that's the lesson here, because there were some technical problems with the website last night for people to vote. So, hey, maybe next time just keep it simple, get 100 people in the studio and bring back the worm.
Bring back the worm. I'm with you.
Now, away from the debate, was there any other election news yesterday?
Well, actually, ahead of the debate, former Prime Minister John Howard came up with a decent one-liner, which is sort of somewhat out of character. You'd expect it from Paul Keating or someone, but not necessarily John Howard. He called Anthony Albanese a left-wing inner-city bomb thrower who lacks any policy substance. Good on you, John. Also yesterday, both leaders provided tributes to their mums. Mr. Albanese's mother died back in 2002, and yesterday Mr. Morrison had his mother, Marion, on the campaign trail with him in Melbourne. Scott Morrison said the government will push ahead with his proposed religious freedom laws if the coalition wins, and Anthony Albanese wouldn't comment on reports that under Labor the budget deficit in the next few years will be larger. Finally, Michael, early voting commences today. So if you want, you can actually start voting.
All right. So what's in store then for equity markets this week, Sean?
Very good question after the last week, Michael. The lead from Wall Street suggests it's going to be a bit rough, really. On Friday, the S&P ASX 200 finished the day down 2.2% to 7,206 points, and that was after an afternoon recovery, believe it or not. More than 90% of the top 200 companies on Friday lost ground. The information technology sub-index tumbled 4.3%, led lower by Xero, which fell almost 9%. The real estate investment trust sector was sold down, with market leader Goodman Group off almost 4.5%. All the banks were lower, the big miners fell, and CSL was down more than 3%.
And dare I ask about international markets as well?
It's a very scary question at the moment.
It certainly is, isn't it?
Wall Street fell further over the weekend after its roller coaster ride late last week. The S&P 500 fell for a fifth consecutive week, which is the longest losing streak in more than a decade. Labour force figures came out over the weekend. In the US, it showed a big jump in jobs last month and an unemployment rate of 3.6%, which won't do anything to dissuade the US Federal Reserve on lifting interest rates further. News Corp, which is listed both here and on Wall Street, tumbled 16% before finishing 13% lower. That's the biggest one-day fall for that company ever. Away from equities, the Aussie dollar has fallen back somewhat to start the new week around 71 US cents. Brent crude is trading at 107 US dollars a barrel, and an ounce of gold is worth 1,860 US dollars.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, the Reserve Bank on Friday updated its economic forecasts, and perhaps unsurprisingly, they suggest there's going to be a few more interest rate rises yet.
Yes, the central bank now expects wages to grow at 3% by the end of next year, which is 6 months earlier than its previous forecast. Wages growth will keep rising to around 3.7%. Wages are critical to the trajectory of inflation and interest rates. The Reserve Bank now thinks headline inflation will hit 6% later this year, and underlying inflation will hit 4.75%. Price rises will then moderate to the top of the RBA's target band. In terms of economic growth, the bank stayed at its earlier forecast and thinks it will moderate to about 2% in 2023 and 2024.
But rates, Sean, what about the rates?
Yes. In its predictions, the Reserve Bank has assumed the cash rate would rise to 1.75% by the end of the year and then 2.3% next year. Now, that's not a forecast. It's basically what market economists think will happen, but it is telling that the bank uses those figures. The money line is this one, Michael. The Reserve Bank says it will do what's necessary to ensure that inflation in Australia returns to target over time. This will require a further lift in interest rates over the period ahead.
Okay, well, look, kind of putting that all into a very kind of practical sense, did rates have any effect on the auction market over the weekend?
Yes, I think they probably did. Auction clearance rates fell across most capital cities, suggesting higher mortgage costs are already dampening the market. According to CoreLogic, vendors are also pulling their homes from the market. In Sydney, the preliminary clearance rate was 58.7%. That's the lowest in 2 years. In Melbourne, it was 64.6%. That's the lowest since late last year. So interest rates are already hitting the market.
All right. Now, Sean, how about this one? Macquarie Group delivered a 56% jump in net profit to $4.7 billion, but its share price tumbled more than 7%.
That was because CEO Shamara Wickramanayake was cautious about what lies ahead, with many regions and markets in which the financial services giant operates being particularly volatile at the moment. One of the busiest parts of the market was Macquarie's commodities operation thanks to rising prices, and its capital markets division did really well thanks to all the mergers and acquisitions activity. Shareholders will receive a higher, partly franked dividend, though not quite as high as many had expected. Macquarie is a truly global business nowadays, with 75% of total earnings made outside Australia. Some parts, though, are struggling with higher costs. The cost issue and the fact that the dividend wasn't quite as high as hoped are really the main reasons why Macquarie's share price fell so hard.
Sean, away from the result, information on how much money Macquarie's senior managers make were also released. This always gets some headlines, doesn't it? Because there are some big figures.
Oh, astronomical, really. So Chief Executive Shamara Wickramanayake is always among the top 2 or 3 paid CEOs in Australia. She made $26 million last year, so she'll stay among the top 2 or 3. That was up $5 million. But she was only number 2 at the bank. The head of commodities in global markets did even better. A guy called Nick O'Kane earned $36 million for the year to the end of March. Now, clearly, that's based on performance, and we know commodity prices have been flying. That part of the business did really well. But $36 million for 1 year's work for one person?
Sean, you and I are in the wrong jobs, it seems.
Clearly.
Now, Sean, 3 senior managers from the Star Entertainment Group resigned late on Friday. This happened as the inquiry into whether the gaming giant deserves a licence in New South Wales continued.
Yes, the Chief Financial Officer, the Chief Legal and Risk Officer, and the Chief Casino Officer have all resigned. All were named by former CEO Matt Beckier as people who let him down, or, in his words, showed bad judgment. As the weeks go on, the pressure is going to come on directors of the Star. The culture at the Star was poor, that's pretty clear. That really is the responsibility of the board, notwithstanding Mr. Beckier's argument that they shouldn't be held accountable. Remember, almost all of the board of Crown Resorts has now been replaced since the beginning of the Royal Commissions into that group. Directors of the Star will go as well. I don't think there's any doubt about that. Some of them will start appearing before the inquiry this week, but at the end of the day, the buck stops with the board, and I think some of them will end up out the door.
Now, Sean, you mentioned earlier that global media giant News Corp also reported on Friday, and it's worth actually having a bit of a closer look at some of that because it really didn't impress investors.
No, I said earlier on that on Wall Street, the share price dropped 13%. Locally, it dropped 8%. Revenue hit a new third quarter record and net income was up 8%. All that sounds good. It's on the back of a strong rebound in advertising, new content, licensing revenues, and strong digital subscriber gains. Its Dow Jones business was a particular standout. And Foxtel's total paid subscribers jumped sharply thanks to KO and Binge, the 2 most recent acquisitions or the 2 most recent services they've released, but nowhere near as much as investors thought would happen. All in all, the outlook statements also weren't overly upbeat, and investors really sold the stock off hard.
But REA Group, of which News owns a chunk, has benefited from the booming property market, hasn't it?
It certainly has. And, revenue was up 23% during the March quarter. National listings were up 8% for the quarter. Melbourne really led the way there. But again, it just wasn't as good as the market had hoped for, and the outlook statements weren't as promising as hoped for. And REA Group's shares ended up down 6% on Friday.
Okay, now Rio Tinto Chief Executive Jakob Stausholm has added his voice to the debate on renewable energy. He says that Australia isn't shifting fast enough to allow coal-fired power stations to be removed.
Iron ore miners are massive users of energy and have a vested interest in the debate. Last week, much of the discussion centred on AGL Energy and its largest shareholder, Mike Cannon-Brookes of Atlassian fame. Mr. Cannon-Brookes wants to buy the business and close the power stations earlier than scheduled. On Friday, Rio's Mr. Stausholm said the rate of coal closures would ultimately be set by Australia's commitment to investing in renewables. People will keep using energy, so the debate should be about ramping up renewables as opposed to working out when we shut down fossil fuel stations. To me, that makes a lot of sense. That's actually about the government providing incentives to boost renewables so we can shut down coal-fired power stations.
And just on that topic, Sean, the boss of APA Group, which runs much of the electricity infrastructure on the east coast of Australia, said $30 billion in investment is needed.
That's to upgrade transmission in Australia to build the thousands of kilometres of high voltage lines to connect up renewable energy, including the construction of 35 potential renewable energy zones across eastern Australia.
Okay, moving on to overseas news, and this one out of Afghanistan, Sean. The Taliban-led government has ordered women to wear a burqa in public areas and government institutions less than a year after it took control of the country.
Many of the promises made by the Taliban are being broken very quickly. Legal guardians of women who refuse to comply face penalties such as detention, and female civil servants will be sacked if they don't obey the new rule. The burqa should be worn, according to the Taliban, because it is a respected tradition in Afghanistan and the best type of hijab. The rules, according to the decree, are intended to avoid seduction of males.
Right. Okay. Sean, it was a significant moment over the weekend in Irish politics with Sinn Féin, which is the political arm of what was the IRA, winning elections in Northern Ireland.
It's the first time the former nationalist military group has won a majority in Parliament and sends a very strong message to Boris Johnson's government in London. Sinn Féin's goal is to unite Northern and Southern Ireland, which have been split since 1921. Now, the 1998 Good Friday Agreement ended decades of violence between the Irish Republican Army and the Unionists and led to a power-sharing deal. But this will be the first time that the IRA has held the upper hand in government, right when Britain is trying to sort out the Brexit mess relating to the border between the south and north of Ireland. A very significant moment for that country.
Yeah, it sure is. Now, Sean, you know it's going to be a good week when we are starting the week with an Elon Musk story, because he's just the most entertaining of the billionaires. And the pitch being used by Musk to convince Twitter shareholders to sell him the social media group for $44 billion has been leaked. And in true Elon Musk style, it's very blue sky.
Yes, the New York Times accessed a copy of it, and certainly Mr. Musk is dreaming big, which I suppose is fair enough given what he's done in the electric vehicle market and private space exploration, stuff like that. Look, he reckons he can increase revenue at Twitter by 5 times in the next 6 years, cut the group's reliance on advertising and get into the payment systems business. Mr. Musk reckons Twitter can reach 931 million users by 2028, more than 4 times its current level, and have 104 million subscribers to a new product called X, which he hasn't actually told us what it is. He hasn't detailed it. However, X will have 104 million subscribers, according to the pitch to shareholders.
That sounds both very optimistic and mysterious at the same time.
Yeah.
I love it. All right, now up next is the Fear and Greed Daily interview. And today, Sean, you're speaking with Scott Haslam from Crestone Wealth Management.
Very, very timely, this one. I think Scott starts off by saying markets last week were brutal. His word. Scott isn't an overstated guy. He's pretty understated. So for him to say brutal is really making a point. Great chat about what's happened and what it means for markets and what to look for as we go forward.
And Sean, speaking of frank assessments as well, it's worth having a listen to our resident economist, Stephen Koukoulas, in Fear and Greed, the week ahead, which is released every Monday as well.
That's right. Stephen had a great week last week with all the central bank action, led, of course, by the Reserve Bank lifting interest rates for the first time in 12 years. Very excited about the whole thing. This week's a little bit slower, but there's just so much to dissect over the past 7 days or so. Well worth listening to Stephen on this one.
Yeah, they're both up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Monday, the 9th of May, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook. And why not have a go at listening to us through your smart speaker? All you have to do is say, play the Fear and Greed podcast. I'm Michael Thompson, and that was Fear and Greed. Have a great day.